Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update, and we are now on April 25th. That is Wednesday, 2018, around 1:40 p.m. Central Daylight Time. The enemy of the metals? That dollar just climbing higher at the expense of most currencies and putting most of the metals down. Okay, it's hard to compete when the market first goes up to just over 3% on 10-year yields and 2.5-year or 2-year notes, not 2.5, 2-year notes get up to 2.5%. That's what I meant. And, you know, that's weighing on the stock market, too. You got to ask yourself, gee, if the S&P pays on the dividend yield an average of $1.90, say something like that, and you're making 2.5% on your money, do you want to take the risk? Things that people ask. Energies, holding in, that's about all that you can say. But it's that dollar and it's higher interest rates that have the metals on the run at this point. And you can see on the weekly chart, you're now in a down thrust because prices are under the 18-week moving average of closes. You can almost see the pattern here of lower highs, lower lows. And the settlement today is going to be right in this neighborhood. It's around 1322.70. When you take a look at a daily bar chart, bang, this is the lowest we've been in a while. No getting away from it. It's not the low of this area, but it's certainly attacking it. And you can see that the pattern is one of a higher high and a lower low. It's almost like the market got caught off guard here, and that's pretty much what I think actually happened. So now we've had 3 days of testing the 100-day average. It's not holding well. The next support could be the 1311.80, the 200-day moving average of closes, but the bears got this market under their control, not the bulls. Resistance comes back up at 1325.50, and then the 18-day average at 1341.40. What about that Bollinger Band? It's right here. So the Bollinger Band has teamed together with the 100-day average, not the 200-day, which is right here. You can see them. And that's what the market is trying to hold. It did that back here as well. And from there, you had one heck of a rally. What about momentum? Momentum is oversold as can be. So the bears either take this market and shove it, or what happens here is that momentum, if it starts spinning and turning on them, you get a short covering rally. Either way, for me, the problem in the market is you're caught in these sideways Bollinger Bands that the market, and you can see it, it's crystal clear. It's trying to come out. It failed on the upside. Is it going to fail on the downside? In the GLD, the ETF, you've got the lower highs, now lower lows. So you joined into the bear trend. You went right down into the support level. Your low today so far, 125.06. The 100-day average is 0.3. The lower Bollinger Band is 125.23. You're holding that. You've bounced back off it. And the same problem. You're oversold as can be. The difference here is you're trending, whereas you're not trending in the futures. And that gives the market a more bearish prominence. When we take a look at GDX, the miners, they're going, hold on, boys. I've got the 100-day and the 18-day, and I'm supporting that right now. Momentum is worked out of an overbought condition. Today's low of 22.32 did take out the previous low. So yes, the market has the pattern of lower highs, lower lows, but it's acting stubborn. It doesn't want to close under the 18-day average of closes. Is that going to be enough to support the other markets? I don't know. What I do know is not one of them is throwing out anything bullish. That's probably the important part. In the gold-silver ratio, we've gone from 82.45. That means you need 82.5 ounces of silver to buy an ounce of gold there. You fell to 77.98, and it's come back not quite to a midpoint, but getting close to it at 80.08. In the silver market, the key for silver not to break is 1649.5. If it breaks that, what happens is it's going to give up this pattern of higher lows and higher highs. As anyone that's been watching, I've been pointing out the resistance levels. The 200-day average is this gray line. The Bollinger Band is this curved black line. And remember, you will trade within Bollinger Bands 95% of the time. The resistance that's now in place is solid at the 1674.5 and the 1673.80 level, which is the 100-day average of closes in the 18. You've got your resistance point. Momentum is down. You're neutral because you're under the 18-day average, momentum down, but the swing line up. Take out 1649.5, and I don't have anything left on that chart that is bullish. And by the way, this is a failed breakout. Remember when the market, and we were talking about this, like in gold, do you see the sideways action here? This market tried to break out. Remember the gray line, that's your 200-day average, and your upper Bollinger Band. You got over it. Okay, the first time over it, you normally come down and challenge it and check it out. That was here. That was on Monday. You followed through with a bit more of a break on Tuesday, came back and gave up that today. Now the question is, what's it going to do? So I'll call that the first attempt at the breakout. If it's going to succeed, it's going to come back at you, but I'd prefer not to see 1649.5 taken out. Copper, same type of resistance. Your 100-day average is here and your Bollinger Band is here. Now, we know yesterday what the market did. The market the day before had an outside day down. Then we heard about the trade delegation going to China. When that came out, the market popped through that high. But what I said, the objective on the upside is the closest of, when you have an outside day down, at the upper Bollinger Band or another key moving average. All your key averages were below you. Only the Bollinger Band was there, and it stopped the rally. Now when we look at the platinum, you went down to the lower Bollinger Band today. You got to 911.40. Hit that, and you've come back to 912.90. The trend is down. In order to negate the trend, you got to take out the rally high of the swing line, 937.70. But you're at a downside objective, the Bollinger Band, that is held in the past when it's been hit. You're oversold at the same time. I'd prefer to get momentum staying down, not just getting into oversold, but the trend is down. Palladium, same thing. You went back to the 18-day average, not the Bollinger Band, and you're looking for support in the market. But all the trends in the metals are minimum, neutral to bearish. Nothing is in the bull camp at this point. What's hurt the market is cleared the dollar. And it is trying to come out of this long sideways action to the upside. We still have the pattern of a lower low and a higher high. It's riding the upper Bollinger Band. It's over it today. Yesterday, the market finished at 90.53 under it. So you don't have successive days. You're just plain overbought. The odds of staying over a Bollinger Band are only 5% of the time, so I will not be surprised to see the market try to correct at any point, maybe find support at the 100-day average of closes. But this overbought area has got to be a concern if you're a trader. And I use that type of momentum, by the way, when we talk about pivot points. Pivot points are an interesting technique. What traders look for is if you get a market that's got a lot of volatility, they're looking for potential buy signals, the blue lines, to get out at a neutral point on the chart that's predetermined, or to sell the market if it gets up to these, buying back at either the lower point right here I'm pointing to, or that 18-day average. Well, it's actually not 18, it's a pivot point that they go with. I've put together some videos on this. Why not take a look at them? Give us a call. Go to our website. By the way, you probably have pivot points in your charting software. You can click right up here, and you'll find out how to work with them. I'm Ira Epstein. You have a great day. I'll see you tomorrow.